Welcome, everybody, to Tax Office Weekly Tax Update for July 28th, 2023, otherwise known as episode 79. Glad to have you all here with us. Our monthly lineup of programs, we are just coming into August, where we have about 30 credits of real estate. September representation is shaping up quite nicely with a few last-minute details. We'll have those classes posted in the next week, but the entire August lineup is available. November brings us back to our annual Getting the Office Ready, which also should be a fabulous program. My daughter tells me I say fabulous far too much. A tax office support project has one seat left. We just added some folks this week. There's one seat in this cohort. So if you find yourself to be sole practitioner, small firm, no one else to bounce things off of, we cover the gamut from tax problems, office politics, software, and other practice management issues. By all means, if you want to join us, it's a great program, and we have a seat left. Meets every Friday from 1 p.m. Eastern to 2:30. And then during tax season, while we continue that, we add 2 hours on Wednesday night to, again, capture all of your problems and make sure you get the answers you need. I'm joined by Ellie Jones every Friday during tax season. Rita Ryan, Mark Dombrowski, Susan Anderson, and others all pop in to help us get through the night and answer your questions. Speakers for our real estate program next month include AJ Reynolds starting next week, Kathy Morgan, Mark Dombrowski on a couple of representation intersections with real estate for selling properties with liens. Amy Wall Street becomes Amy Main Street for a couple of programs. Brian Coddington, Mr. All Things 3115, will be joining us for 2 programs. And I fill in a couple of things somewhere during the month. Happy to join you. So we're going to talk about the Atlanta Forum today, where Mr. Werfel was the keynote speaker, Commissioner Werfel. But San Diego is now sold out. So don't even think about going. That's amazing. The IRS sold out a program at a time when we hear attendance is down at many events. The IRS is selling out. And coming up 2 weeks, Frank Agostino's 4th installment in the 2023 Tax Controversy Series, Federal Rules of Evidence in Tax Court, Part 2, 3 IRS credit, 3 NASBA credit, 3 continuing legal education for New York and New Jersey. The legal education certificates are provided by Mr. Agostino. All of the tax and NASBA are provided by us. By all means, 3 hours starts 6 p.m. on Tuesday the 8th. You can either join us in New Jersey, where free pizza is included. Otherwise, join us online here. Same time, same channel. Our AFTR annual federal tax refresher program. We're awaiting imminent approval by the Internal Revenue Service. This will be included if you are a subscriber this year. So, can't wait for that. International Tax Conference is in New York City, October 30th, November 1st, November 2nd. Me, Rita Ryan, Marina Hernandez is back after taking COVID off. And Ruth Mattson, we'd be pleased to have you join us. Information is available on the website. So, courtesy of our friend Roger Nemeth, brought to our attention the IRS is having problems with e-services today. Last I looked, it wasn't back up, but we're unable to pull transcripts or access e-services generally. So they'd like you to come back. COVID operations numbers this week, the usual, are very interesting. So as we know, I'm going to provide you with numbers as of July 15th. Yes, a Saturday, and yes, 13 days behind. They're getting slower and more delayed. As I've said before, I do expect that the COVID operations numbers are going to go away at some point because COVID's been over since May. All right. So 2.34 million unprocessed individual returns. They did decrease by 66,000. However, 1.6 million are in error correction. No change. What's the emphasis? I think moving paper out the door. Follow where we're going to go with that. 1040X, 1.2 million unprocessed. No change. In other words, the numbers up there right now are still July 8th and 1.2 million returns. Form 941 is at 470,000 as of July 19th. That's to be expected that it's up. The numbers go up primarily because we are at the end of the quarter after June 30th, but before July 31st. The numbers should go up drastically, and then in the succeeding 2 months come down as the service catches up and processes those returns. Form 941X, I had to double check the numbers. Inventory at 488,000 on July 19th, up 114,000 returns in the last week. So our back of the envelope analysis suggested at the rate they were moving, the IRS actually has anything submitted before May 1st, anything that was submitted before the end of tax season, we think they got to. And now this is all just new stuff that's coming in. I mean, man, the mills are cranking this stuff out, and it's just mind-boggling. There are this many businesses that should qualify and didn't. Whole purpose of employee retention tax credit was to get you through COVID while employing your people. You're supposed to not pay the withholding tax and use that money. Well, what happened is that folks, it's become a reward for the survivors, I guess, is the best way to look at this. Now, they're up 114,000 returns this week. Now, during tax season, they were processing 20,000 amended returns a week in 2 service centers, and Commissioner Werfel promised us they would process 40,000 a week starting after tax season. And he's pretty much kept that or exceeded that. Nothing has changed. Identity theft still at 430 days average to resolve. 8802 and ITIN, no update. I was in San Diego for 3 days, 2-day conference, and I got to watch Jason Stats. If you follow what Jason does and says and publishes related to automation a little bit, but mostly to artificial intelligence and how it will impact our industry. Of course, in walked a robot looking to take his job, and that was the introduction. And then on he went to give his talk. Not a bad speech in person. So if you get an opportunity to hear him talk, it's worth it. So we're building on the Secure 2.0 bill. There's a bipartisan bill out there designed for auto enrollment, supported by both sides. Bill Cassidy, a Louisiana Republican, Tim Kaine, Democrat of Virginia, have both sponsored this bill. And the idea is to enhance automatic 401k enrollment provisions that come with the COVID 2.0. And this is the Auto Re-Enroll Act of 2023. It's going to amend federal benefit laws that will allow, after a period of time, an employer to automatically re-enroll an employee who had previously opted out of the plan. And Secure 2.0 requires a new 401k or a new 403b plan to automatically enroll new hires. I think at whatever the lowest rate would be, 1%, whatever the bottom is, right? The idea is that folks will get encouraged, they'll do it. The thinking is, on the one hand, that folks never get around to it. It's like exercise. I know I should do it. I mean to do it. I want to do it. They just never get around to enrolling. The other thing is, like your gym membership again and Netflix, once you're in, you generally don't opt out. And that's the goal here, is to get people in early. As a small business owner with a 401k plan, I will tell you that I need participation of the rank and file in order to be able to, as an older person at a higher income, put in the maximum amount into the 401k each year. So plans that are so-called top heavy, you're not allowed to do that. So you rely on everyone participating to be able to participate yourself. Now, the legislation's goal is that it's going to give the plan the opportunity to periodically prompt those workers who had affirmatively opted out. So in other words, we're going to be able to say you're in, right, after every second or third year. Now, this got interesting, and I'll tell you why. I know I've been talking about this every week. I don't know that some of you are actually following what goes on here. But Ron Wyden, Democrat of Oregon, is on the Senate Finance Committee. He's the Senate Finance Committee chairman, actually. And he's been on this kick since the Live Golf Tour merged into PGA, and the operating company will be owned by the Saudi Royal Investment Fund or Sovereign Wealth Fund, and PGA Tour will be this stripped down little bitty, not US-based nonprofit, which will be the rules, the regulation, the Hall of Fame. So they created this proposed bill that's going to modify the 501c6 rules, which cover sports leagues. And they're going to exclude sports organizations that have assets over $500 million from being tax exempt. Haven't had a chance to look. Something tells me this affects golf and golf only. But with that, Senator Wyden introduced a second bill, the Ending Tax Breaks for Massive Sovereign Wealth Funds Act. And that doesn't spell anything cool. This is a bill that works in tandem, and it targets specifically the Saudi Arabia Sovereign Wealth Fund. Current law exempts a sovereign wealth fund and other similar government-backed investment funds from the 30% withholding tax on FDAP payments, right? So if I am a foreign entity and I have U.S. interest, U.S. dividends, fixed determinable annual periodic income, generally interest, dividends, could include payments from a retirement plan and some other income. Unless we have a tax treaty with your country, there's a default tax of 30%. So that would affect them. So the 30% withholding tax is being taken away because there was an exemption in place. So let's back up. I'm sorry. So that 30% is the default. And what they're proposing to do here is there's an exemption. If you read further down, right, don't stop at the part you like, keep reading. There is an exemption for sovereign wealth funds. You meet this criteria, we exempt you from paying 30% tax on interest and dividends. You pay no tax because we would like you to invest here in the United States if it's your foreign government's money. So they're going to deny that exemption from the 30% withholding, right? So now we're going to add back the 30% that's going to come in. The bill exempts any country that we have a free trade agreement with. So they also can't be categorized by the Department of State as a foreign country of concern. Think right now, probably North Korea, Russia, Iran, or Iraq. So the bill affects Saudi Arabia, Russia, China, Qatar, the United Arab Emirates, and Kuwait. Some of those countries I thought we were friendly with. Certainly some of them we are not. So any of those governments who have investments here in the U.S., they're now going to have to start paying 30% tax on the earnings, the interest and the dividends. All right, you're going to hear a lot about the employee retention credit today, and I kind of apologize for that, but it was a big week, and this is one of those things, crypto, Bitcoin comes out in 2009. It takes until 2014 for the IRS to say, treat it like a capital asset and follow those rules. 5 years, right? Took a couple of years when LLCs come out first in 1977 in Wyoming. It takes the IRS until the early 90s before they say, yeah, we're not going to create a whole separate tax system for it. Here are your rules. So they can be slow. So, after how many gazillion dollars we're now just hearing, maybe we're going to pay attention. So House Ways and Means has this oversight hearing on the employee retention tax credit. All right, so this was Thursday. The employee retention credit experienced confusion, delays, and fraud. I couldn't get a copy of it, but that's what they called this meeting. But I do have a link for you if you want to watch the video of it. So, discussion about the need for better guidance from the IRS on guidelines for programs like the ERTC. Now, what's not fair here is, I'm going to tell you in a minute, the IRS had no representatives at the hearing. What's also not fair is, as part of the CARES Act, the government said, look at this great idea. We can keep people working. And they didn't have the foresight, and they couldn't. But Congress didn't put anything in place. They said, here, money. Now they're backpedaling and they're embarrassed. And we're starting to see, hey, look, we want to regulate. Well, the money, it's already out the door, right? So their focus was delays and backlogs associated with the program and the need to modernize IRS systems and provide electronic options for the 941X. At the same time, we're saying that it's fraud. Let's electronically file more of them. Those two things don't seem to go together. It's also important to remember we passed this thing in March of 2020. We say, here, money, and then we shut down the IRS for 90 days. So again, how much regulation was going to go on here? How much money would be out the door? But they're also focusing on the importance of providing sufficient resources to the agency. Well, stop taking away the $80 billion you gave them. You already took back 25% of that. Now, what's bothersome is the witnesses they had here did not include any IRS or any government witnesses. Nobody at Treasury, nobody from the Joint Committee on Taxation to explain the thinking, nobody. Larry Gray, who's a CPA, he was there as a private citizen, but you know Larry from NATP and from speaking there. Great speaker, good job. Roger Harris, the president of Paget Advisors, that's the franchisor. Pat Query, president and CEO of the National Association of PEOs, never heard of that group. Linda Sispo, president and CEO of the New Jersey Center for Nonprofits. So lots of interesting folks to hear from. So while that was going on, Commissioner Werfel was down in Atlanta as the keynote speaker at the IRS Nationwide Tax Forums. So IRS has cleared its backlog. I just told you those numbers. I agree. The weekly numbers we've been supporting support his contention. So the IRS is now going to start to place additional procedures to vet the claims. Well, good Lord, they should have had a box at the top of the amended return that said, I am amending because of supply chain, because my sales actually went down, or government orders. Which of these things? It doesn't say that. You just put down, hi, this is how much I think I get. The IRS has received 2.5 million claims for the employee retention credit as of last week. Now, that number, they didn't provide clarity. Is that amended 941? So you filed up to 5 per client. So is this 500,000 businesses that filed? Is it 2.5 million businesses that filed? Some multiple of potentially up to 12.5 million amended returns. I guess we could go back and add up the number I reported on the slides for the last 2 years. So IRS has made a great deal of progress in the process of the claims. We agree. 99% of them are only 3 months old right now, I think, or less. And I agree with that too. The numbers support those statements. So the further we get from the pandemic, we believe the percentage of legitimate claims coming in is declining. This is Werfel. Instead, we continue to see more and more questionable claims coming in following the onslaught of misleading marketing from promoters pushing businesses to apply. Verbatim what the commissioner said. To address this, the IRS continues to intensify our compliance work in the area. Well, it's hard to do compliance with what's coming in because you have no idea even the basis for the claim any of these businesses have. I will say they have enforcement ramped up rather well. Commissioner Werfel reminded us that you can report ERC abuse by submitting Form 14242, report of suspected abusive tax promotions or preparers, and you can send in any supporting information you want. What he didn't mention that I will mention is you might want to attach Form 211, request for a whistleblower award. Be interesting to see if anyone gets a whistleblower award out of this. I know a number of attorneys who have recommended people report and file the whistleblower form. So Mr. Werfel further discussed fraud and how Treasury and the IRS are going to work together to find solutions they can share with Congress. Only solutions they have are arresting people and collecting money, right? Lesson learned. Next time you're going to have a big cash giveaway like this, either don't allow amended returns, don't use the tax system, or have a very narrow window. And as soon as you realize there might be a problem, modify your program. At some point, they should have modified the program and at minimum said on the 941X, if this is an ERTC, under which provision did you qualify? And when they saw how many supply chain qualifications there were, they would have stopped. Morpho has a press release out there saying what a great job the IRS employees catching this up, and that is true. House and Ways Means we just said had this meeting. They criticized the guy. He wasn't there. His people weren't there. They weren't invited. And they criticized him for downplaying the magnitude of the current backlog. Well, there is no backlog. He's not, so they need to get their facts a little straighter. And again, he did meet the told us he was going to do $40,000 a week after tax season. He actually did more than that, and he got what was almost 1 million ERTCs, right? Those are at the start of the year. Those are almost all gone because everything in inventory was from after tax season. So they did get a lot done. We have to give them credit where it's due. So hand in hand with this, the IRS warned against the misuse of supply chain disruptions in claiming the ERTC. And I ran out of time today, but I have a letter that I can share if anybody wants to see it. Was sent to a realtor friend of mine who has a large number of brokers and 7 support staff getting a W-2 on payroll, right? They have a full-time accounting person, a full-time recruiter, and several support people for the agents, all W-2. So, of course, the proposal we got was for 26,000 times 7 people. No math, no questions asked. He and I sat down, and I told him all the things I needed to do it. And he said, you got to be kidding, like the PPP information. He says, nobody asked me for that. They just told me I can get all this money. So I said, well, no, I'm sorry. So anyway, he actually doesn't qualify at all. We went back and looked at it. But the proposal letter said, due to the 10% general economic supply chain impact, you qualify. I don't even know what that means. Clearly said supply chain. He agrees he had no supply chain issues. He had no government orders other than they couldn't go into a house with people here in New York. He didn't qualify. So I'll share that at some point. So anyway, IRS put out a memo. There's a copy of the memo in your handouts. And they offered up 5 scenarios. In 4 of them, the supply chain was affected, didn't qualify you, and in 1 case, it partially qualified. I've heard stuff as bizarre as I own a chain of gas stations and we have Subway stores in them, and we couldn't get Frito-Lay products for our meal deal. Therefore, the supply chain affected me. I couldn't sell meal deals. I could only sell sandwiches and soda, and my sales were up 40% because we added delivery. But I should qualify, and the answer is no. You didn't qualify. So many businesses have used the provision to justify ERTC eligibility. I couldn't get an answer as to where they came up with that, other than that's the takeaway, I guess, from all the exams they're doing. They're asking people where, and that's what's coming up. Businesses don't qualify into the provision simply because they had a bottleneck, shortages, or had to switch suppliers. Right, so that's worth a good read. It's a General Legal Advice Memorandum, GLAM 2023005. The full title is what you can see. That full title, it's a paragraph. I won't read it to you, but please pull it out. So it's looking like we're going to see a salt showdown. So there's a July 25th Washington Post article. It's funny. I don't particularly follow the Post for this program, but some of my searches, this article popped up. So Republican House members from New York, New Jersey, and California are going to vote against party lines here with this big tax package that came out of House Ways and Means, right? They put together that package. They're looking to vote on it. It's got all the goodies the Republicans want to see. And they're threatening to vote against a package approved in June by the House Ways and Means. We knew this, unless they add a provision to raise the SALT cap. Now, House Ways and Means already passed the bill on June 13th, the American Families and Jobs Act. They put it out to a full vote of the entire House. Now, it addresses the big Republican issues. Getting back R&D expensing, eliminating the 163J in business interest limitation, and going back to 100% immediate expensing. It hasn't come to the floor yet. It's not scheduled yet, so it's probably not going to happen before the upcoming August recess. Now, the Democrats oppose the bill because it doesn't roll back the clean energy provisions. I also think they don't support it because it doesn't bring back the enhanced child tax credit, either the higher $3,000 limit, the under age 5 additional amount, the age 17 provision, or the monthly advance payments. That's the big thing that they want to see because that monthly advance payment raises household income. Also, the clean energy provisions are all getting knocked back. The $7,500 new car credit, the $4,000 new car credit. So unlikely, but possible that this comes out. Saw this in a bunch of places, including Mark Dombrowski was the first person to send it out. Thank you, Mark. IRS is going to hold unannounced taxpayer visits to homes and businesses. Now, if you remember, the IRS previously, because of all the fraud, stopped making phone calls, at least as your initial point of contact. You might get a call from an IRS agent, but you'll previously have gotten a letter. Hi, we're examining you, we're going to call you, etc. So now they're taking away this tool from revenue officers. And I have to tell you, we've gotten a large number of cases, at least historically, from the IRS showed up at my house. Oh, do you owe them money? Yes, I do. You know, what they had was a business card that said, you know, on the back, R. Smith, and they had a phone number. Oh, you know, Mr. Smith just knocked on the door. He was probably doing something else in your neighborhood, knocked or doing the required walk by to see, do you have a boat, a Ferrari, what do you have in the yard? So he left the card, and you do need to call within a certain number of days. They'd sign a power of attorney, we'd call, and no problem there, right? Because they weren't going to do anything other than ask you about what's not filed. So they feel that this policy effort reduces public confusion. So you can't, if the agents don't come out anymore, that's a 100% chance it's a fraudulent agent at your door looking to collect money. A few unique circumstances. Taxpayers are going to get letters first. I still think Treasury would have showed up to arrest Bernie Madoff in person. I don't think they would have called first. Senate Finance Committee, Mike Crapo is the ranking member, from Republican from Idaho. He's been kind of anti-IRS and kind of anti-field visits. So he's happy that this happened. He put out an announcement on his website. And Republicans have been opposed to IRS visitations, among other IRS issues. So this is interesting. I did not include this letter in your handouts. If you want it, let me know. Ran out of time. But they sent a letter to the top officials at the Federation of Tax Administrators. So your 50 states that have one income tax or really any other kind of tax, large cities like Philadelphia and New York City, which collect tax, most local municipalities that have an income tax in Ohio, Michigan, Pennsylvania, all members of this federation, because they all have common issues, right, that they need to discuss and lobby. So they set a deadline of September 4th for the states. Do you want to be part of this pilot? And they want them to partner with the IRS, probably similarly to the way pilot they partner in e-file. And the focus groups that were done as part of the Inflation Reduction Act, they spent that $15 million to look at the feasibility of doing an online filing of their own. They believe it's going to boost buy-in from taxpayers because in the focus groups, they said they'd be more interested in a tool if it did federal and state filings. Me too. And if they don't get a big buy-in, guess what? The IRS is probably going to see this beta, my prediction, roll out only in states where there's no state income taxes. They want to see how many people really use it. You'll see this BA, Florida, Texas, Wyoming, Florida and Texas anyway, and maybe Nevada. Large states of filers with no income tax, right, to worry about. A couple of interesting bills came out, which you might appreciate here, because I've been talking a lot about the Corporate Transparency Act, how it impacts our practices, and what we need to do. So, two interesting things came out. And do I have the other slide here? Yeah, all right. So, these might be out of order, so maybe this can be overlap. So, the Protecting Small Business Information Act of 2023, introduced June 12th by the chairman of the House Financial Services Committee, Patrick McHenry of North Carolina. He also introduced the Accountability Through Confirmation Act of 2023. Now, that act is going to ensure that FinCEN is held accountable to Congress and the American people by requiring the director of FinCEN be appointed by the president with the advice and consent of the Senate, similar to the IRS commissioner and the Treasury secretary. I did not know that they were not an appointee like that they went through the process until I saw this. I did not know that. Interesting. FinCEN has a lot of power, collects a lot of data. It does make sense what they're saying and what they want to do. So McHenry also sponsored Protecting Small Business Information Act of 2023. This is going to protect our sensitive information and privacy by delaying the effective date of the Beneficial Ownership Information Reporting, otherwise known as Corporate Transparency Act, which is set for January 1st, 2024, until FinCEN finalizes the access rule and the congruence rule. Now, the access rule is the one where they said that federal law enforcement and other agencies like them are going to be allowed to access it with no definition who other agencies like them are. Are we going to see, what's his name from SVU, right? Was always able to access Stabler. Was always within an hour of having a suspect. He had those tax returns, the bank statements, the credit cards, and he knew how to read all of them, right? So is Elliot Stabler going to be looking at your stuff? I hope not. And that's what this act is saying. You know what? Before we let you have that open up Pandora's box, who are you giving the keys to? And maybe that's reasonable. And probably as part of that too, what's the process for approving who's going to get the keys? All right. So, without a delay and given the lack of awareness and steep penalties, right, it's $500 a day or 2 years in jail, we are concerned that millions of businesses, small businesses in particular, will face further hardship and confusion as they try to meet their BOA filing requirements on January 1st, 2024. Well, remember, they have a whole year if you're an existing business. You have until the end of 2024 to do that registration. New businesses have 30 days to register if they're formed in 2024. So there's a little ambiguity here. There's actually a lot of time. So this was put into the record on the July 18th hearing. This is the AICPA statement, by the way. FinCEN back in 2022 said it was difficult to estimate the number of entities that are going to be reporting companies, but they think it could be as many as 32.6 million entities filing initial reports. 5 million will be filed each year. That's a huge amount. The total 5-year average of expected initial reports for new companies, 10,510,610. FinCEN thinks 6.6 million reports have to be filed in 2024 and 14.5 million annually for 2025 and beyond. Outrageous, right? Take to release to report customer callback system benefit. Oh, let me go back here. So we need to be watching this. I think I gave you a copy of the AICPA letter. We need to be watching this because if they do delay it a year, that's going to change a lot of my planning for this tax season and for next year, and they'll probably change yours too. So this is going to be an important hot button to watch, these two acts, and right, the Protecting Small Business Information Act, right? They couldn't call it something easy to remember, like, the Delay Corporate Transparency Act. They couldn't do that for us, right? All right. So TIGTA, the customer callback system benefits taxpayers. Performance measures are not comprehensive. More callers could qualify. So this is typical of TIGTA. You've done a great job. It was a good program, but more people could have benefited, right? And if too many people benefited, they would have said you did a good job, but you broke it. So if you remember, starting in 2014 or so, phone service has been abysmal at the IRS due to inadequate funding, inadequate phone system, not enough employees. FEMA, as we know, taking employees away, at the flip of a switch without IRS consent, as former Commissioner Reddick told us, flipping that switch, and now 10,000 IRS employees are answering the FEMA phone, not the IRS phone. Well, the IRS added in the last year a callback system, and it's been pretty fabulous. The callback system says, hey, the phones are busy. We think we're going to call you in 36 minutes. Would you like to go do something else, and we'll call you back? We do it in our office. Certainly it saves money than using call and queue. So call and queue is back, by the way. So in fiscal year 2022, TIGTA offered callbacks to 1.1, is it 1.1 or 11? To 11 million callers, saving 3.6 hours of hold time. It was developed as a response to long wait times, calculating that it saves 34 minutes for taxpayer on average for the 109 million inbound calls during fiscal year 2022. Customers with a longer than 60-minute hold time were not offered a callback. Plans are to expand this to 116 telephone services. I think that means call sites by August of 2023, and this will allow us to account for 95% of all inbound phone calls. I think it's great. Provided it works, I think it's great. So what are the highest demand services, by the way, during this same period? 23% were calling for individual income tax services. Only 10% of the inbound calls were for PPS, 8% calling about installment agreements, 7% to taxpayer protection unit. Think about that number, right? Almost as many folks were calling taxpayer protection as we were calling in on PPS numbers. And then taxpayer assistance center appointments, 6%. Now, what would be interesting here to know is where are the automated calls going through that come in through tools like Call and Queue and other auto dialer programs. But I'll take this. So one thing I want to say about TIGTA, by the way, is Treasury Inspector General for Tax Administration. Their job is to audit all of the IRS programs and systems, looking for, of course, malfeasance and fraud, but they're looking for efficiency, both of dollars that were given to budgeted, and they said, go do this. Well, did you do it? Did it work? Did you deliver the results timely? And are you working to improve it? They're also looking at, did you screw it up? Did it not get done? Are things broken? Can they be done better? At the end of these reports, typically it's 5 items. It can be more, it can be less, where TIGTA says you ought to do these things. The IRS management gets the opportunity to say, we agree, we disagree. You're right, but we're not going to do that, and here's why. Right? I've never seen them not answer. So if your phone line, if you call in and the phone lines are busy, IRS determines if a caller meets callback criteria. Only 24% were considered eligible. They had to be coming into a queue that had between 15 and 60 minutes of wait time. They figured 15 minutes is enough for you to wait, not too long. More than 60, I think they figured we're not going to get to you or you're going to get that famous courtesy disconnect. Telephone that you're on has to be able to receive a callback. Some phone numbers, it's blocked. You're calling from a burner phone. You're calling from, I guess, a pay phone you can't get a call back to. You have to call between 6:30 a.m. and 7 p.m. Okay, so that's going to rule out call centers like the International Center in Philadelphia that's open until 11 p.m. It's going to rule out a lot of the calls there. TIGTA says current measurements offer no solution to taxpayers who are disconnected and can't get through. That's true. The courtesy disconnects are a problem. The mean employee hangups are a problem. The occasional, I think when they were all getting used to working from home, I think we got disconnected a little much because people didn't mean to do it. They meant to hit hold, they hit disconnect. They should be allowed in the IRM to call us back. They should ask you first. They ask me my number all the time. They don't call back. TIGTA recommends the IRS create baseline goals so that they can measure the performance. How many were you doing? How long was it taking you to call back? How many got completed? Did you not make all the, did they not get through on the callback? Did it not work? Could you not hear somebody? TIGTA wants to create baseline goals, saying if a baseline doesn't match its goal, IRS disagreed with that, right? TIGTA also recommended the IRS eliminate the 60-minute wait time threshold to be eligible. IRS is going to agree to this, and they're going to eliminate it by December. That's kind of cool. You ever notice how Waze wants you're driving down the interstate, they want you to get off at exit 12, only to get back on at exit 13? Algorithm is saving a minute, and somehow that makes sense to the algorithm. Well, I think the same thing here. First, if there's 61 or 65 minutes, that's close enough that why are we cutting those people out? But more importantly, if you get wider and wider acceptance here, you're not going to need the 60-minute callback window, right? That's going to go away because you're going to get all your calls, hopefully under 60 minutes. Okay. Now, we have a diagram here showing the calls in millions, the 173 million that were received, 109 million were looking for live assistance. And it talks about remaining in the queue. And of the 109 million who called, they answered 22 million. That doesn't seem to do so well. You can see further down, 15 million were not eligible for a callback. 5 million did not accept the callback. Ouch. So we offered 11 million, 5 didn't take it. Ouch. Okay. 6 million did accept it, and 5 million of those 6 million were connected. So interesting numbers. That's all in the TIGTA report. We provided you with a copy of that report. Now, I do not want to put you to sleep here, so I might do this as a high discussion. We have a new I-9 form and remote verification rollout. So starting August 1st, there's a new form. You must be using the new I-9 by November 1st. So you want to tell this to all of your clients. The prior version is going to go away. It's good until October 31st. After that, it goes away. Now, the overhaul is extensive. It looks different. We couldn't get a full copy. As soon as I can, I will share it with you. But it now breaks out into a number of sections. The Preparer Translator certification is now a supplement, a separate document. They moved it off the main page. It's going to be used only when necessary now. There's a re-verification and rehire, which is also a standalone document, which you can use if re-verification is required. The I-9 is now eligible to be done on a tablet and a mobile device, as well as downloaded. So if you remember, it had always been a paper document and always been people where the original government documents got reviewed by somebody who worked for you. And during COVID, we made that a little bit easier. We accepted digital versions. Well, we're going to go away from that a little bit, but we're going to allow these things to actually be completed electronically. Welcome to the 20th century IRS or Treasury, whoever's document this is. The term alien authorized to work was replaced with non-citizen authorized to work. Okay, nice term. Better than alien. They don't understand alien. This is awesome. Acceptable documents now includes acceptable receipts, as well as guidance and links to information on automatic extensions of employment authorization documents. Think about our friends from Afghanistan and the Ukraine who are permitted, if they have an I-94, They are permitted to work with that document if they have a departure place of one of these countries in crisis, right? There's been a lot of confusion by our colleagues telling their clients, the employers, you can't hire that person. They're not legal. Well, in fact, they are. And this is an attempt to make that a lot easier. So good for the government, right? They're trying to. Box has been added to check if the I-9 was examined during the new alternative procedure or the traditional, I'm in the office, I saw your paper. Instructions have been cut down to 8 pages. Part of that is because we've made several forms ancillary, supplemental, and they have their own separate instructions. So it makes this a little bit easier. All right. Now, I'm just going to quickly, we now have remote verification, which is also called the alternative procedure in the instructions. Qualified employers, we'll talk about who they are in a minute, can conduct I-9 remote documentation verification starting August 1st. Employers need to follow specific steps to be able to use this procedure. And again, they're calling this the alternative procedure. If we offer alternative procedure at a hiring site, you have to offer it to everyone, not just this one person. The exception, though, is that if you want to offer it only to remote employees, but use the traditional method in person, you're allowed to do that. Basically, you can't discriminate. You might remember we used to tell our clients, you can't say to a new hire, hey, on your first day, bring me your driver's license and your social security card so I can fill out your I-9. You have to say, please bring your qualifying documents, because that's discriminatory, because someone who doesn't have both a social security card and a driver's license might think they can't work in the United States or work for you. Discriminatory. So the same thing here. We're trying not to discriminate. Qualified employer that can use the alternative method, the digital method, are those that are good standing participants in E-Verify. Well, you can go further on if you have E-Verify people. I'm not in E-Verify. You might not be in E-Verify. So you're back to doing paper unless you participate in E-Verify. All right. Here are the steps. Again, you have to be an E-Verify person or E-Verify user. So if you would like, and you're not a subscriber, you might want to be a subscriber. So by all means, please join us. We'd love to have you. Yeah, migrants from Alpha Centauri. Thank you. Thank you. Everybody, thanks for joining. Thanks for tolerating me being here in wherever I am at Wildwood, New Jersey. And you all have a great weekend. Thanks for stopping by.